Cowboy, it's Faye coming to you live on this edition of Algo Factory Tech. I want to thank all you guys for coming on board. We got some new members that have joined since yesterday. I want to welcome all of you. I've been saying it for years. The largest transfer of wealth is about to get paid. How the hell do you want to get paid? How are you going to do that? You're going to keep working at the Macy's perfume counter? No. You join it. You join Algo Factory Tech. Because we not only teach you how to trade, we teach you how to build the algorithm that you need to capture profits from the market. In other words, we teach you how to become the exit door that catches money. You can work anywhere in the world. You don't need math skills. You can know absolutely nothing about trading. The majority of our people know nothing about trading. Nothing. You can be working as a baker at a bake shop. You could be working retail. You could be working food service. You could be working as a doctor.
I was in construction.
Construction.
I was in construction at the time.
Or kindergarten. You can work as a kindergarten instructor, right? Whatever the heck it is you do doesn't matter. We make the coursework easy to digest. And when you have trouble, we have the live lab where you learn through immersion. We're here every single day, Monday through Friday, making it happen for you guys. So, with that being said, listen, don't sit on the fence waiting for money to pass you by. Give me 6 months of your time, and we will make it worth it for you. We will teach you how to profit in the chaos. So with that being said, Cowboy, let's get into it.
All right, yeah, we got some people up in the chat already. We got Brad. What is it? Brad King, Valley Girl, giving us the shout outs. And we do have a fair amount of people already watching over in the live lab. In fact, I got 4 join requests. Let me add them. 2, 3, 4. Just added 4 more people, 4 more brand new people over to our private group. So let me go ahead and complete that. So isn't that great? So we'll make sure we let me write a note to myself to add them to another aspect of it. But now they have access to what we're doing here. So that's beautiful. Rest. That's we have an automated system that kind of puts them in the queue, so that just got done. So yeah, that's that. So if you do join, what'll happen is you're going to get some emails, and pay attention to those emails. Those emails will give you what you need to know as far as how to get into our private Telegram room. So I do get emails from time to time with new people, and they're like, hey, where do I see the live shows? It's not on the website. Like, well, it's actually, there's emails that we send you, and that gives you instructions, and follow those. But yeah, so we have a couple of things to look at today. First of all, before we get too far, let me put this note up for myself. Okay, so I'm going to throw up the website for those of you out there in YouTube land. It's www.algofactory.tech. Okay, that's our URL. You can visit that. I'll throw it up on the screen. And then, of course, if you're actually, if you're on your phone, if you're on a computer and you have your cell phone with you, you can always zap the QR code. So I just threw that up on the screen. That'll take you straight to our website as well. And like the gorilla said, if you want to learn how to build trading algorithms, even if you know nothing about trading, one thing to understand is an algorithm is not necessarily programmed. It's not necessarily a bot that trades for you. We help you take it to that level, right? We have an in-house coder who will charge you a fraction of what it would normally cost to code your algorithm. But anybody who's trading successfully is actually using an algorithm, whether they know it or not. And all an algorithm is simply, it's just a process by which like if these conditions happen, you take these actions, right? So you're looking at the charts, certain things happen, whatever it is, whatever your conditions are that you set up, and then you go ahead and press the buttons yourself, right? You don't need a computer to do it. That's an algo. Any trader who is successful at all does that. And then what we do is we help you code it if that's what you want to do. And then you can set it up, walk away. It's not like you can completely ignore it. I mean, most algorithms are going to work. They're going to perform according to market conditions, and they're pretty easy to identify. That's kind of the easy part, is knowing when that works. And we do that through something called back testing. And what's really cool about when you have an algorithm coded is you can sort of push a couple of buttons to refine your algo, we're going to do that here and now. Where everybody's going to watch me do it. It's going to be really cool. Okay, so let me see here. And we're going to discuss today also stop losses. My man Cool Cat, grab my glasses here. Cool Cat, who I've been trading with for, I don't know, I mean, he's been working with me at V since probably 2018, trading. And he was asking me yesterday, like, how I do my stop losses. I'm like, well, I have a lot of different algorithms, so how I do a stop loss is going to depend on that algorithm. But we'll talk about a couple of examples of stop losses today, and that's going to be kind of our beginner content. But before we go there, I'm going to talk about the exciting part of trading, which is like, you know, the algo and, you know, watching it make money and all these things. So let me do this. I'm going to go ahead and share the screen. Entire screen. Okay. I'm going to zoom it in so everybody can see the numbers. And I'm going to load the algorithm. Okay. Okay, let's see. Oh, it's not going to work on this. Let's go to 30-minute. Okay, now it's on there twice. I'm going to take this off here. So I've got two, the way this was coded and the way that, you know, TradingView and coding, it's like you're trying to fit your algorithm into a kind of a box. So when the time comes that you want to code something, part of our services, we're going to give you some clues as to how you might have to kind of code it, how you might have to, you know, change things in order to code it. Meaning that having the computer read certain things takes a certain skill when you're manually doing things, and that's part of what we train here. And if you want to see what the algo looks like, I'm just going to go ahead and blow it up real quick. It's all on one screen, so we don't have to use that multi-panel. And the actual algo is this on the screen right now. So what happens is that, you know, it might be, let's see, so here's a fire off right here, these big arrows. So you got these kind of small arrows, and that means that the conditions are, you know, the conditions are kind of setting up for a trade. And then this arrow, this large kind of triangle, means the trade is on. And you got three of them right here, right? So one thing about this particular algorithm is I designed it with a lot of trading conditions. Usually people want to trade the trend, right? That's like most of your successful traders are working the trend. I know some really good traders out there who actually are able to trade though when it's choppy, and that's when there is no trend. And we talked about that yesterday. Okay. So on the show yesterday, if you go take a look, I mapped out when things are trending and when things are choppy. And a good example of this is like, this is on a lower time frame. So what I would do is actually go to a higher time frame, right? And let's see, it's 18 hour. That's good. So about, I mean, I would say a good 70% of the time, the market's going to be choppy. It's going to not be trending. It's going to be just kind of in a range. And then 30% of the time, it's going to be trending, right? And so traders mostly rely on the trend. And I'm thinking to myself, well, that's leaving a lot of money on the table, because if the market is 70% chop for the most part, depending on what asset you trade, and then that's 70% of the time you really can't trade that much, because most people they get killed in the chop, right? They're looking for a trend like this yellow line right here, right? But this box that I drew is the chop. This I would call, even though it's a little bit of a trend, you could trend trade this a little bit. It's a choppy trend. There's trend, there's chop, is everything in between. But again, you're looking at a lot of chop in the market for the most part compared to trend, right? For example, here is a nice long bit of chop followed by a relatively short period of trend, right? So anyway, the algo I built is for chop, which is rare. Most algos are going to be trend based. So back to the algo itself, and I'm also building a trend based algo. And I was talking to my coder yesterday. I seem to talk to him at least once a week, and I have the algo that I'm going to put together right now, like when I manually backtest, we're looking at sometimes a risk to reward ratio above 10-1 is not uncommon for this. So this is really exciting. And the Gorilla and I are actually putting together a tier where we can should I talk about this, Gorilla? Should I talk about this or leave it alone? Should I keep the secret for now?
Yeah, keep it secret for now.
Don't talk. Okay, never mind.
No.
So I'm not going to talk about
it on Thursday.
Okay, Thursday drips.
Thursday.
Drips Thursdays. Okay.
And
so
then
I was going to talk
on
about
the live show. Also on the live show on Thursday on Rogue, we'll also unveil it as well. We'll announce it. So one on the YouTube free, and then on the lab we'll reiterate it on the members only lab, and then of course live on YouTube and Rumble we'll announce it through Rogue as well. This is amazing, amazing friggin' product, man.
Yeah, we got a new product coming out. So it's going to be exciting, and I think it might be a limited. Only so many people are going to be allowed to have it. So we'll see how that goes. There needs to be a little more development, but long story short, what we'll do is we'll take a quick look. I do want to talk about stop losses for Cool Cat. Okay, so now Cool Cat has been trading a long time. He knows how to do stop losses, but he just wanted to know how I did stop losses. So now I was my answer yesterday was a bit of a non-answer because it just depends on the algo that I'm using, right? But a lot of my algos have become so tight that I can do some pretty tight stop losses. But in the meantime, I want to show the numbers on this algo. So the algo's here. You saw it. I blew it up, and then I shrunk it back down. And you'll see the actual test trades are all right here, these arrows, because I've loaded the strategy onto the system. So you'll see these actual trades that happen, right? So what I'm going to do is I'm going to bring up the strategy tester. It's on the bottom of the screen. And I'm going to change a few things to show you how changing the algorithm can make a difference, right? So I'm going to not worry about what this looks like on top. And I'm going to blow this up down here, and I'm going to do what's called deep back testing here. So I'm going to generate a report from May 1st to July 20th. But before I do that, I'm going to change the aspects of the algorithm, right? First of all, the way this works and the way I've had it coded is for inputs. Right now I had them design it to where I could change my stop losses, change my targets, change the percentage that are taken at each target. I can do a lot of different things. I can even change. So this algorithm is going to only work when the ADX is below 20 on a much higher time frame, right? So I had them do that because I tested it. I manually tested it. Now I can change that. What if it's below 25, performs better? I don't know. So I can change this to 25 and test it and get the numbers, right? What if I discovered yesterday that I wanted a 1.5 ATR below entry for my trade? So that's an example of the stop loss, and we'll talk about that later. But what if the numbers come back better with a 2 ATR below entry instead of a 1.5? What if the take profit is better if I don't do the first ATR? If the take profits are say at 2 ATR and 3 ATR, not 1 ATR, I can change all of those, and I can go back and test it over time and over different time frames, right? So this is the really cool thing about a strategy tester. And just a quick example of this, because I want to spend a little more time on stop losses today. We could go deeper into this in the private show, but I just want to show everybody what's so cool. I'm going to generate this report right now just with the default settings, right? Don't worry about the actual, numbers here, 358. There's a lot, this is going to be, what's to be paid attention to is the profit factor. This is on the 30-minute chart. And basically you're looking at a 1.763 risk to reward ratio, and you're looking at a 60% hit rate, just as it is right now, right? So those are the numbers. The $358, that's obviously, you're gonna make way more than that. But I need to figure out how to fix the back tester to reflect the actual numbers. So for now though, what does matter is this percent profitable, which is your risk to reward ratio. I'm sorry, that's your hit rate, and your profit factor is risk to reward. That means profit factor is for every $100 you invest or whatever, you for every $100 position, you're going to make $176 on average, right? So that's what's to be paid attention to. Now watch this, okay? I'm going to go back into the inputs. I'm going to, instead of a 1.5 ATR stop, which is something I'll show shortly here, I'm gonna make it two ATR stops. Now watch what happens when I generate this report. Now you're at a 64% hit rate, and your profit factor is a little bit higher as well. So we were at 58 before, now we're at 64, which is substantial. That's a 6%, actually, well, 6% increase, really 58.6. That's like an 11% increase or better. So, that's actually a big deal when you're talking about a hit rate. You're getting 11% higher hit rate. It's a lot more money. Plus, your profit factor is slightly higher. So what I'll do is I'll go back, I'll reset it to defaults, reset settings, right? And I'm going to just take profit at the second ATR instead of the 1.5, or instead of the first. So I'm going to take profit, my first and second profit, 34 and 33% of the position are all going to go off at the second ATR. And I'm going to see how that works out, right? So I'm going to hit OK, generate a report. Now we're down to 52, but the profit factor is 1.9. So the actual risk to reward is much higher. You get a little bit lower of a hit rate. So now you got to do the math and say, okay, well, I can tell you what the math is right now because this number used to be at a 300 and now it's up to 460. The real number is going to be like 10 times that for net profit. That's what I still haven't quite figured out on why these numbers are on this strategy trader are not coming back the way that I would want them to. Part of it's going to be the inputs. But anyway, so now that I've done this, you can see making these slight changes. Now, this might be different on the hourly time frame. I'm on the 30-minute, right? So there were 51 total trades in like a 2-month period from May to July, 2.5 months. So basically, you can do the math on that, right? Let's do that. So you got a 52.94%, right? Let me just type this so I don't forget it. 52.94, and your RRR, your profit ratio is 1.958. Okay, so again, given that these numbers are correct, and we'll get this corrected as far as how to do this, we'll figure that out. But in the end, you're looking at, oh, come on, I hate when it does this. I've got the sticky keys on right now. So, you're going to do, say for every $1,000 position, you're going to make $1,958, right? But you're only going to make that 52.94% of the time. So you got to multiply. I'm going to just say I'm doing $1,000, right? So just to keep it simple, let's make this a little bit smaller. So we'll do 1958 times 0.5294. And that means that every time I click the button, if my math is correct, should be 1958 times 0.5294, about $1,000. It's $1,034. Okay, so now that's putting $1,000 in each trade. So that's some pretty big numbers right there. So again, I'll have to run through the strategy tester and fix whatever settings is going to give me the actual income amount. But for the meantime, some other settings you can look at here for the inputs. The properties themselves, right? I'm going to go with 2% of my equity. I'm going to do pyramiding, so I'll get a lot more trades this way, where I can do like pyramiding of 1 means I can only run 1 trade at a time, right? And I can also account for commission. It's hard to do because we do. I think it's half the spread is the commission, so I'm not sure how to calculate that. Let's see, percent USD per contract per order. Might have to figure that out, or not even worry about commission. Just understand that it's small and not gonna make a difference. Margin for long positions. Let's just say I'm going to do 2% because of the. Let's just say it's EUR USD, even though I'm on the DXY, which I don't even trade that, but whatever. And I'm not going to worry about those, but let's see here on inputs, we're going to look at, okay, I'll just keep the inputs as they are for now. I'm going to reset them to defaults. And I'm going to put the stop loss at 2. And we'll do the take profit at 2 just to mess with things. And then because I did those other settings, we're going to notice that the strategy tester spits out some different numbers. So it's all rotating around the same amount, which is good. So anyway, that's how the strategy tester works. So with the stop loss on this trade, people are wondering how that works. So for example, on this short right here, okay, the entry for this short was at this little arrow right there. So it's going to look like this. Okay. And the exits were down here. That's the third exit. So the ATR at this point, I think this is ATR. This ADX. Let's throw up the ATR. Average true range. So the computer does this automatically, but I know that at that point, the ATR here was 8 pips, or 8 cents in this case. This is as if we're trading a DXY like CFD or something like that, right? So it'll be 8 cents is the ATR from, so it's, what did I say, 2 ATR from entry? So the ATR is 8 cents. So 2 ATR is 16 cents. And the entry point is right here at 102.382. So I subtract 16 cents from that. So 102.382 minus, 102.382, is it? Minus 0.16 is going to come out to 102.222, right? So I can actually type that in here, 102.222. That didn't work. Oh, because I need to add. Sorry, guys. 102.381 is my entry plus 0.16. 102.541. We're going short, so I had to add the stop. So this is what the trade looks like. And then the first 3 targets are going to be ATR based. So exit 1, exit 2. So it looks like your first exit was, I think, here. No, first exit was going to be like here. Second exit, third exit. So, and that's the trade. I mean, that's how that is. Now, normally I had this sitting at 1.5 ATR, so it would be 16. I'm sorry, it'd be 8 plus 4, so it'd be 0.12. So 102.381 plus 0.12, right? So the stop used to be tighter. It used to be 102.501. And you would think, oh, the stop's tighter. You're going to be risking, the risk to reward is better on this, right? That looks like a better trade. Less risk, more reward. But I found that, and it's counterintuitive, but because I have the strategy tester, I was able to input and say, you know what if I make the stop deeper, right? And how does that benefit you to make a stop deeper, right? I made the stop deeper, and yet there is a better profit at the end. That's counterintuitive. That's the opposite of what you think would happen, right? Well, the reason that happens is because as the trade goes, we're finding that a lot of these trades wiggle. And so some of them will wiggle up here, and then they'll go into profit, right? Well, if you have your stop too shallow, you get stopped out. But if you have a little bit deeper of a stop, you don't get stopped out when the trade wiggles, right? So even though it looks like you're kind of leaving yourself less profit compared to your risk, you're actually winning more trades because you don't stop out. So it's just part of the stop out strategy. And we're going to go deeper into stop outs on the private show. But I just wanted to show everybody the strategy tester, what some of the potential is. I could actually do this on a 5-minute chart. And you can see like how many trades are on that lower time frame. So if I go to the strategy tester on the 5-minute and I go from May to July, and I'm going to look at the properties and put them back to defaults. Yeah, that's default. Okay, so I'm going to hit OK. Let me see here. Properties, we'll say 2%. of equity permitting to I'm not going to worry about the rest of that for now. Generate a report. All right, so what's key here is first of all, the percent profitable is actually pretty similar to the 30-minute, but there are 579 trades. So in a 2.5 month period, there are almost 600 trades. You think about that for a minute. 600 trades, right? So if you're making $10 a trade, that's like $6,000 because you're scalping. And it's really, really difficult. Now, it's going to be less than that. There's going to be slippage. There's going to be, what do you call it? There's going to be the spread. So I might have to change like the stop loss. I might have to change a few things to account for slippage and spread. This number might actually turn out being like 300, or the percent profitable might turn out to be like, 51, whatever it is, right? But the profit factor might turn out to be 1.6. But under any circumstance, there are so many trades here, even though you have like a lower percent profitable and profit factor due to spread and things that the computer really doesn't necessarily calculate. You can calculate slippage, that's in there, but because of this, what you're looking at here, where's the slippage? So you can say slippage is like 15 ticks, so 1.5 pips. Generate a report. You see, now you need to fix something because you're profitable, but your profit factor is a lot lower. So that's your slippage factor, right? So what do? You go in there and you fix your stop loss. Generate the report. See, so now what you've done is okay, this strategy on this chart doesn't work. We need to fix something. So this is why it's so valuable to understand how to deal with this, right? Now, is the slippage 15 ticks? Is it really, or is it 1.5 ticks? Well, in this case, on this chart, this is the DXY. We don't really know what that is. I know on the EURUSD, it's probably going to be about 15 ticks because that's actually something I would trade. See, there you go. You need to work on your strategy, right? So you need to go back in here, go to your settings, figure out what you're doing. Pyramid more, pyramid less, things like that. So this is pretty good stuff, though. The strategy tester is it's really, really valuable, amazingly valuable. So, all right, well, that's about it for the free live show. And we got to get that gorilla send off. We're gonna head over to the private. But thanks a lot, everybody, for coming in and having fun in the chat. That's always a great thing. And Gorilla, take us away.
Yeah, thank you all for joining us on this free session. Listen, don't hesitate and don't procrastinate. Join us over at the Members Only Lab. Let us show you how you can build the life that you deserve, the power of trading, so you can trade your job, upgrade your life, be financially free, work from anywhere in the world, and or accumulate the resources with the cash flow needed in order for you to buy real assets so you can be prepared for what is to come. Largest transfer of wealth is about to take place. Do you want to get paid? Algo Factory shows you how. That being said, Cowboy,